Now, where do we go from here? Quite straightforward. You see that after hours we started having that little dump here because we were in that blue. You see the blue has always been in control, always have been, and this is why I mentioned you have to wait for cups to close before we start going long again, even though you see that it may be controlled selling. This may be controlled selling, but it will take a long time sometimes, isn't it? And the fact that it's trending down, you cannot take a long position because you will have a drawdown as it builds liquidity. So you have to be smarter about this as well. Now let's take a look at the 30-minute chart here. Now, I talked a lot about the macro structure in yesterday's video. Please watch that as well. Understanding the green right here as we build more liquidity here. You have to be more careful here how the green started building more liquidity. I mentioned about this 602 and 604 yellow zone here, and you see the market building liquidity here, and the bulls are building escape plan here as well. So just pay close attention to that. There is one more liquidity here I want to pay close attention to. Now, before we reach Wednesday's FOMC, which will be a very important day, I want you to pay close attention to that possible liquidity wedge here. Now, if there's any downside, this must grab the liquidity here and thereafter close the larger cup of that 20-day moving average before we start building more structure with that yellow algorithm of the 20-day moving average right there. So there are two very important levels here. One at that 596 pink where the liquidity is, as well as of that 20-day moving average. How do we get down here? You have to be more mindful of the structure to get down there. If we continue to trend down in that magenta and orange, you just have to be more careful. Magenta especially, be more careful if we trend down the magenta, but otherwise orange will always be best. Now look out for the particular structure here before then with that yellow algorithm here. Now if there are larger structure here, you pay close attention to that, especially of that yellow 600 level. Let the cups close. By then your 5-day moving average, as I mentioned, would have turned into some sort of resistance. You would have a very beautiful structure here before it starts heading down. Otherwise, just be more careful because I talked about the liquidity here that is building, and you may want to see if the market grabs the liquidity again of that 602, 604 level. Now, I would prefer to wait for cups to close, the larger cup to close right here, and bounce it off that 604 level. But given it's a short week, we may not have the luxury of seeing liquidity being played out so smoothly this week. So if we miss this, so be it. There will always be structure for next week, but I want you to pay close attention to this liquidity level here as well. This is important, especially if we reclaim 5-day moving average along the way after a stronger selling right there. So quite simply, you have to understand the ranges before FOMC right here, where the green and yellow algorithms are, as well as where the upper Bollinger, which is about 606 right now, and the 20-day moving average, which is about that 594 yellow, and where the 5-day moving average is, which is close to the center of the range here. It may start trending down tomorrow if we open a little lower, so pay close attention, especially in that orange. This may be a grind here with that orange and magenta, so you just have to be more careful before we start retesting the major liquidity levels right here, as I've indicated, has shown you. Thank you very much for watching. Remember, FOMC on Wednesday, so just be more mindful of that. Thursday is a trading holiday, so this week trade lightly, please. Do not overcommit. There will be bigger moves